Good morning, everyone. Welcome to the Getting Started with TradeStation series. Today, we're going to highlight OptionStation Pro and how you can strategize options trading with the platform. So before we get started, the usual introductions. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And it's always a pleasure to be here talking about the TradeStation technology. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and that past historical performance is no guarantee of future results. For additional information on these disclosures, please visit www.tradestation.com/important-information. But today we're going to focus on the OptionStation Pro platform, which is specially designed to trade options on equities. So let's go ahead and pull it up. I'm going to go to the apps menu right here on the TradeStation platform, and I'm going to open up OptionStation Pro. One of the things that I wanted to mention about OptionStation Pro is that it's fully integrated into the TradeStation platform. So in order for you to access OptionStation Pro, you do have to launch TradeStation first and then find the OptionStation Pro button. But once it launches, it is separate from TradeStation. So it's like running two separate applications. And the reason for that is because we wanted to maximize the area on your screen for your options analysis. Once you open up OptionStation Pro, it should load up the same way that you left it last time you were using it. You can see right here on the top left corner that I'm looking at SPY or spiders. And at the very top, we see information on spiders. We see the current trading price, we see volume, historical volatility, and data related to the underlying. But right below, we see the option chain. We have all the options grouped by expiration date. This is very standard on most trading platforms. The ones that are shaded in a lighter gray, those are my monthly options. And the other ones are weeklies and quarterlies if they are available on the underlying that you're loading in OptionStation Pro. Now, if you're trading a particular term, let's say that you're only trading weeklies, you may want to remove the monthlies and the quarterlies, and vice versa. If you're just trading monthlies, then you may want to hide the weeklies. And if you're trading, all the terms, that's okay. You can just leave it the way it is. But right here at the very top of the option chain, we have a filter dropdown that allows you to do that precisely. We have the expiration types right here, and then you can, pick and choose the ones you want to see. By default, you're seeing everything. If I open up one of these expirations, you'll see the option chain. Right here inside parentheses, it also tells you how many days until the expiration of this option group. Over here on the right-hand side, we have the average implied volatility for all the options that are in this expiration group. And based on that implied volatility, we have a expected move on the underlying. So this plus and minus 4.30 just means that based on the implied volatility of these options, spiders is expected to move $4.30 up or down. Remember that this expected move can be in either direction. So this is not telling you if, spiders is going up or down, but the probabilities that spider will move this amount in certain direction. We also see that amount, the $4.30, reflected as a lighter shade of gray right here behind the strikes. So you can see, if the options that you're trading are within the probability of movement. I think that's very helpful to have that shading right here in the strikes because it does give you that information. Am I choosing an option which is within the probability of movement, or is it outside? Because maybe your strategy is to pick something that is outside of the probability of movement. So it's very useful to have that information right there behind the strikes. I'm not sure if you notice the different shades of color. There's a lighter shade of gray behind the quotes that tells you which options are in the money. So the ones that have a lighter shade of gray are in the money. The ones that have a darker background, in this case black, those are out of the money options. So depending on which option you're trading, whether it's a put or a call. You can see the inverse on that, in the money and out of the money characteristic. We have bid and ask information on each side for the calls and puts. Again, this is very standard on many trading platforms. But the bid and ask on TradeStation, of course, are clickable, allowing you to place trades on the options. One thing controls the behavior of your clicking on bid and ask, and it's this drop down right here on the top right corner. We have two options that are available for clicking. You click to either trade or you click to analyze the trade. Analyze trade is when you are in analysis mode and you just want to look at a position graph. You want to analyze risk reward ratios. So if you are in analysis mode, you can set it to analyze trade. And instead of generating an order ticket, what TradeStation will do is will send you to the analysis tab where you can do that analysis. It'll load a position graph with all the risk measures, and you'll be able to do changes to where the price is going to go and see what effect that movement would have on your theoretical profit and loss. So let's go ahead and do both. Let's say, for example, that we are interested in buying a call with a strike price of 432. Let me choose something that has a little bit more in its tradability. So I'm going to go here to the November monthlies. They still have 30 days until expiration. And let's say that I'm buying a call here at the 432 call. Let's choose the 430 just to have an even number. So the 430 call, I know that it's trading at $11.98 per share. Now that's the asking price, and you have a bid price. Clicking on the asking price will open up or will create a long theoretical position, and clicking on the bid will create a short theoretical position. Notice what happens when I click on the ask. It automatically sends that information over to the analysis tab. Let's take a look at some of the analysis functionality before we even place the trade. Let me go ahead and switch my position graph to the way that it comes by default, because this does not look like a regular long call. And the reason for that is because I have mine set to a Greek Vega. Let me go here to the drop down and set my graph to theoretical value P&L. There we go. This looks a little bit similar to what we would expect from a long call. And additionally, we have some additional days that we're trying to calculate. Let's go ahead and switch it to 1 day, and then we'll come back here and show you the differences on those additional days that you can add to the graph. But here we have a graph on this long call, and we have profitability here on the left-hand side. So this tells you what would happen to your profitability based on the movements of the underlying. We see the prices here for Spider at the bottom scale, and you can see as the prices go down, we are in the negative territory of our profitability. Now, the nice thing about the profitability, this negative profitability, is that it's flat, meaning that there's a limited loss expected on this particular position. If you want the details on what that maximum loss would be, you can just hover over the graph, and you can see a little legend that follows my cursor, and it tells you that on the blue line, which is, I should have started there. The blue line represents the value of the position at expiration. And you can see that it gives you a value of 1,177 at the moment. And you can see how it changes as we speak based on prices of that option. But this is just giving you the real-time profitability of the option would be. But here at the bottom, you can see information about the maximum loss. See right here, the maximum amount is 1,175, and it's changing as we speak. And then on the profitability side, of course, we have the infinity symbol, since the price of spiders can increase indefinitely. And of course, that represents maximum profit being unlimited. So this is very useful in determining, where the price of the underlying should go in order for us to make money on our trade. The yellow line if you're not familiar with an options position graph, is the value of the option right now. And that's what we mean by expiration plus 1 day right here on the top left. You're seeing, what the value of the option is at expiration and what the value of the option would be right now. Now, there's different things you can do here in the graph that I wanted to show you because as a trader, you want to see what effect any movement on their underline would have on your profitability. We have this section right here, right below the graph, that allows you to add price slices at different prices of the underline to see what effect it has on your P&L. Let me go ahead and click on add. Notice that it adds a vertical line right here on my graph. And when you just click on add, it's just going to pin that line to the last traded price. And you can see the theoretical P&L right here. So if you wanted to know what your P&L would look like when Spiders is trading right now, this is what the value it is at the moment. You're kind of breaking even based on the value that Spider is trading at the moment. Now, of course, you can set this at different plots. You can see that now is set to the yellow line, which is now, but you can set it to plot number 2, which is expiration. Now, if the price of Spider is 433 and 78 cents at expiration, that translates into a 793 loss in your account. So you can see what effect the movement of Spider has on your profitability by having this lies on the chart. Now I can grab that vertical line and move it anywhere on my graph. So let's say, for example, that we want to move it to 460. Maybe we are bullish Spider. We are expecting the price of Spider to go up, and we want to know if it reaches our target of 460, what effect it would have on our profitability. So let's go ahead and move that line over to 460. If you can't really drop it at 460 exactly, don't worry. This is just an approximate calculation. You can always come back here and type the price yourself if you want to. So if you want to have an even 460, you can see that if it indeed goes up to 460, my P&L would be 1,825 at expiration. Now, you may not be intending to hold this trade until expiration. Maybe you want to exit this trade a week from now. Today is what, Wednesday? Let's say that we want to exit this trade next Wednesday, and we want to know what the expected value of this position would be on Wednesday. What I can do is I can go here to expiration plus 1 day drop down and select the expiration plus 2 days. So I'm adding an additional calculation to my graph, which is difficult to see right now because it's really close to the yellow, but it's a green line. You can see it right there in the legend. Now, if I look over here on the top right corner, I see the different dates for each one of the lines. So you can see how the yellow says now and says days to expiration 30. The blue line says November 17th, days to expiration 0. And then we have October 21st that says days to expiration says 27. Now, this is the date of that green line. We are, in our example, we said that we are looking to hold this trade 1 week from now. So today is the 18th, which means that 7 days from today is going to be the 25th. So not quite the date that we see here. If we want to change this October 21st to October 25th, what we do is we go here to the settings on the very top right corner of OptionStation Pro. You have a settings button. And right here for the graph tab, I'm going to go here where you see the green, and I'm going to set the slider left or right and see what effect that slider has on the date. You're going to see how as I move the slider left and right, the date over here on the top right corner is going to change. So I'm going to slide it over to the right until I see October 25th. And indeed, you can see the date right here reflected on the top right corner. And then I'm just going to click on close. So now I have the ability to see what my profitability would be if Spider goes to $460 by October 25th. I just come over here to my price slice, go to the drop down for plot and set it to plot number 3, which is my green line. And now I can see my theoretical P&L. It would be $1,997. So at any given moment on any options position, you can do this type of analysis. Let's say that we are okay with the analysis and we say, let's put in this trade. I'm going to right click on this theoretical position, which I see it right here at the bottom. This is a single buy. I'm going to right click on it and I'm going to click on trade. This is a way that you go from analysis to trade. I just right click on the theoretical position, click on trade, and then I see the order ticket right here at the bottom. I can choose, the pricing buttons down here. The natural pricing is whatever the bid and ask is showing at the moment. The mid, as the name implies, is going to choose a price between the bid and the ask. Let's just go here, natural, and then place the order. I get this confirmation and I click yes. Order filled. Now, I'm not sure if you heard my computer, but I did hear an order filled confirmation. When you get filled, you have to, take a look at where your positions are and your orders. You do all that here in the Manage tab. Manage is the control center for active orders and open positions. If I look up here, I see a blue row, which provides me information on my fill. This is the order that I sent just now. You can see the date there and the time. If I open it enough, this is 10:20 a.m. Eastern time. I sent an order to buy Spider. This is the symbol. Expiration. I sent it with a limit price of 12.42, and my fill price right here on the right says 12.37. If I want to move my filled price over to or next to my limit price, I can. Let me see if I can click and drag this. Yep, I can, so that you can have what your limit price was and what you got filled at right there in one view. So that's my information on the order. If I want to see the actual position, I go down here. So the Manage tab is divided in 2 panels. At the top, we see orders, and at the bottom, we see positions. And one of the nice things about the positions panel that you're looking at right here at the bottom is that you also see other equity positions. So I see not only my Spider position, but I see TDW, Tesla, and Verizon, which I traded earlier. But I can open up my Spider position by clicking on the expander button here on the left, and I can see the details of that position. It's a single one call with a strike price of 430. If you want to see more details, you can just click on the plus, and then it provides you, more details on that position. We can set a stop or a profit target on that single call. Let's say, for example, if the price of Spider, instead of going up, it goes down. If you remember the position graph, in fact, let's go there. In your analysis, you saw that the only way that you can make money on this trade is if Spider goes up more than a certain level. We can see the break-even point over here, but in order for you to make money on this particular position, the price of Spider needs to go up. If it goes down, there may be no value in holding this options trade. So let's go ahead and say that if the price of Spider drops to 430, I may want to close the position and, cut my losses right there. I may not, reach the maximum loss of, what's the maximum loss here? Yeah, 1,237. Maybe I don't want to go that far, but that's why I'm setting a stop loss at right here at 430. Sometime, between now and expiration. So how do I do that? I go back to my Manage tab. I right click on my position that I'm looking at right here on the Manage tab, and I say, close this position. This will open the trade bar. Notice that this is a selling transaction to close my position. But what I'm going to do is I'm going to set this as a market order. I'm setting it as a market order. I mean, you can choose a price if you want to. The reason why I'm setting it to market is that I'm not really sure what the price of the option would be if the price of Spider drops to 430. So if I send a price specification, it may be away from what I'm looking for. and my order can sit there and not get filled at all. By sending a market order, I know that it'll probably hit the bid or the ask, depending on, in this case, it's a selling transaction, so it'll hit the bid price. So in this case, I'm going to set it to market. Well, what I'm going to do is also turn this activation rule button at the bottom, because I am setting a condition on this order saying if Spider drops to 430, I just want to get out of this trade. So activation rule, let me click on the ellipsis. I'm going to check the price activation. I'm going to type the symbol for the underline. Let me add that. And if Spider trades at or less than, and I put in 430 right here, less than or equal to 430, then I want to exit this trade. Once I click OK, the activation rule is set, and all I need to do is place the order. I get this confirmation, and I click yes, and you can see my order sitting up here. This is a single sell to close Spider. Notice how this is a market order, but if I go all the way to the very end, there's an advanced tab that tells me that I have an activation rule. I'm looking for SPY to be less than or equal to 430. So it's not until that happens that my order gets activated and filled. One of the nice things about this order is that it's sitting on the TradeStation order execution server, so that as soon as the prices hit, it'll be activated. So you don't have to be concerned about having the platform open. This is already being handled by the TradeStation execution servers. So I can shut down my TradeStation and know for sure that I have, a way to exit out of that open position. So let's go ahead and talk about spreads. I'm going to come over here to my options tab again. This is where my options are listed. There's a spread selector right here on the top left corner that you can use. If you're trading verticals, if you're trading straddles or butterflies or any type of spread, you do have a spread selector that will automatically pair up the strike price for you. For example, if I choose vertical, notice how the strike prices are paired up. 431 to 432, 432 to 433. Let's say, for example, that I wanted to do a 430, but 434 spread, 430, 434. If I want to do that spread, I know that it's not available here, but if I want to use a spread selector and organize my strike prices with that spread, I have to come over here to the filter dropdown, and we have something that's called the spread width, which controls how the strike prices are going to be paired up. If I choose 2, it's going to choose the 430 and the 432. If I choose 3, it's going to be the 430 and the 433. And if I choose 4, I'm expecting to have the 430 and the 434, because it'll start skipping strikes and then build that spread. I'm going to click on apply, and then you can see that I'm looking at the 430, 434 spread. Does that make sense? Before I put in this trade, let me go ahead and exit out of my position so that I don't have contradicting trades here. I'm going to go to the Manage tab quickly. I'm going to, first of all, I'm going to cancel this pending order at the very top. I can do that by right-clicking and then clicking Cancel Order. There we go. Now it turns yellow. And over here, I'm just going to right-click and say Close this position. I'm going to do it as a market order and then place the order right here on the bottom right. Order filled. All right, so as you can tell, I don't have any open positions for Spider. I'm going to go here to Options. And now, let's say that I want to trade the 430 and the 434. I know that my click here is set to Analyze Trade. So if I do click on the bid or the ask, it'll send me to the position graph or the Analysis tab. One thing that is happening here, though, and this is maybe good that I came here because I wanted to explain what is happening. If you guys remember, originally I had created a theoretical position on a call, and that still remains at the bottom right here. So not only did it keep that long position, it also added the vertical that I clicked on. So now I'm looking at a combination, or this graph right here that I'm looking at is a combination of those two positions, the single call and my vertical, which is not what I wanted. I just wanted to analyze the profitability of my vertical. So how do I get rid of that single call? Remember, these are all theoretical positions. You can right click on that theoretical and say delete position. And now I'm looking at the actual vertical. And you can see the profitability. You can see that my maximum profit is $135 and my maximum loss is $265. And now, of course, in this particular spread, I benefit from spiders going up. Notice that as the prices go down, I'm in the negative side of the P&L graph. But let's go back here to the options tab. If I don't want to analyze that trade, just make sure that click to is set to trade. And once I click on that particular asking price, then I get the trade bar right there at the bottom and I skip that step of analysis. So you can do that too. If you don't do analysis on your options because you already have that in your head and you want to go straight into the order ticket, make sure that the trade drop down right here on the right hand side is set to trade. Over here, I have my vertical. It's being priced right now at $2.67. Let's suppose that I want to improve my entry and I want to say, let's do 260. And I place the order. And I say, yes, the order is submitted. And when I go here to my manage tab, I can see it in this received section. That's where my vertical is. If I want to see the details of that vertical, I just click on the plus here and you have the details on the two legs of that spread. Does that make sense? So now I have an open order, which I can modify if I wanted to. To make a cancel replace, I just right click on it, click on cancel replace. It populates that order inside of my order ticket at the bottom. And let's say that I just want to hit the natural price to get filled right now. Order filled. And the order gets filled. Now I'm back on Spider. I can open up my Spider row and you can see the legs of my vertical. One of the things that TradeStation does, by the way, some clients like it, some clients don't. Once you fill a spread, what returns to you is individual legs. I mean, you saw how I selected a vertical and you saw the spread on the options tab. You saw that I clicked on the asking price of a vertical and you saw that I submitted a vertical trade on my order ticket. But now when I open up Spider, I see just individual legs. They're not built into a spread. In fact, the P&L is displayed on each one of the legs. If I wanted to combine them into a spread, that's something easy to do. And something that I want to show you because it's important that we all understand that TradeStation returns individual legs, but if you want to see that position as the way that you traded it, you just have to click and drag the legs and drop them on top of each other. So I'm going to click on one of these legs, drop it on top of the other. Let me try that one more time. Okay, you see like a little purple shade when you're about to drop. And as soon as I do that, notice that it says vertical right here. And I can click on the plus and see the details of that vertical. Does that make sense? So for every spread that you trade within OptionStation Pro and you look at your positions, you're going to see these individual legs, but you can very quickly click and drag those legs in order to have a vertical created. All right, let me go back here to options and show you something else. I'm going to come and go over here and set these to single. If you set the spread selector to single, it'll show you your position here on the far right or the left, depending on the vertical you're trading. Notice that I'm long the 430 and I'm short the 434. If I wanted to do a similar vertical on the put side, I could. And what I do is I click on one leg. Notice that I clicked on the bid price of this 435. It highlights the row in red, implying that it's going to go short that leg. In fact, right here, the order ticket says sell to open. But as this leg is highlighted, I can hold down the control key and click on additional legs. That's a way that you can build a spread without using the spread selector at the top left. If you find that using the spread selector, it's a little bit confusing, just remember that you can hold down the control key and then click on the individual legs you want. So if I wanted to hold down control and maybe click on the asking price of this, let's choose this 439, you can see that it highlights both legs, and right over here on my order ticket, this is my other vertical. Let me go ahead and submit a market order on this vertical to show you something really cool. Order filled. I get filled. I hear the order filled confirmation, and I go to the Manage tab. Once I go to the Manage tab, I have my vertical, which I combined by clicking and dragging. And now I see the two individual legs of this other vertical, the put vertical that I traded. Again, I can combine these two legs into the vertical by clicking and dragging. And notice that now I have two verticals, one on two calls, and then I have the other on the puts. I can even take this one step further and combine these two verticals. I'm just going to drag this vertical and drop it on the other vertical, and this provides you an iron condor. So it's very interesting that I traded two separate verticals, and now coming over here to the Manage tab, I'm able to do anything I want with those options legs. I can, bundle them up and see the two verticals, or I can even go one step further and combine all the legs, which creates an iron condor for me. Now, this iron condor, of course, if you want to see the profitability of this iron condor, I can right click and I can click on Analyze a Duplicate. When I do that, it'll send the iron condor over here to the graph. And let me remove this vertical so that the graph doesn't look, disorganized. Remember that I don't have to, actually, I don't have to remove the vertical. What I can do is uncheck it right here on the left, because maybe you want to come back to this vertical and look at the profitability of that theoretical position. But just remember that when you keep on adding theoretical positions to the Analysis tab, all those positions are going to be combined into the graph, and it may not look exactly what you were expecting. This is not the iron condor that I was expecting. But if I uncheck the vertical over here on the left-hand side, you can see that now I see the iron condor. So let's go here to the Manage tab. And if you want to reset this, just right-click on the iron condor and say Reset Position. Then you're back to all singles. All right. So let's go ahead and combine them one more time. All right. I have my iron condor. So we went to the Analysis tab. On the graph here, this shade of gray provides you a view of probability of movement based on standard deviations off of the historical volatility. So it uses historical volatility. It calculates expected move based on standard deviations. Right now, I'm using 2. This little box tells you how many standard deviations are being used. So there's a 95% based on the 2 standard deviations. There's a 95% probability that Spider will be within the shaded area. So those are the things that I wanted to show you guys. And I hope that you enjoyed this introduction on OptionStation Pro. I want to thank you for your time. Thank you for your support of our webinars. And I hope to see you in a future class right here at TradeStation. Goodbye, everyone. Have a wonderful day.